We were descending into the San Francisco Bay Area on what was supposed to be a perfect day. Clear skies, smooth ride, nothing to worry about. But as we got closer, the weather fell apart, fast. And because the forecast looked so good when we left, we hadn't carried any extra fuel beyond our emergency reserves. Suddenly, everything changed. We had one shot to land. If that approach didn't work, we were declaring a low fuel emergency and finding a place, any place, to put that airplane on the ground before running out of fuel. I'm Papa Charlie. School's in session. Let me take you back to that day. The Bay Area forecast was to be wide open. Sunshine, clear approach, the kind of day pilots dream about. But aviation teaches you humility real fast. As we descended, the fog rolled in. Visibility was down to 1.5 miles. Traffic stacked up. Air traffic control started issuing holding instructions. We checked our fuel. We had what we needed to complete one approach, one go around if we had to, but we didn't have fuel for a second approach. So if that first approach didn't work, we were calling a low fuel emergency and getting creative real fast. We had a small margin, but not much. In aviation, your margin is your life. There's a moment when the cockpit gets quiet, not silent, just focused. Your training, your experience really kicks in. And I realized at that moment, we don't have enough fuel to play around. We get one shot, one window, one decision, and we cannot be wrong. That moment demands clarity, discipline, and humility to accept the truth of your situation. Life works the same way. Most people don't think flying has anything to do with personal finance, but aviation is basically finance with severe consequences. And I've coached many people over the years, and I've noticed something. Most people live their financial lives exactly the way some pilots, including myself, approached San Francisco that day, with no margin, no buffer, and no alternate. Just enough fuel to make it if everything stayed perfect. But life doesn't do perfect. Let me break this down. In aviation, fuel is life. In finance, money is life. And the financial version of aviation fuel is your emergency fund. Most people think an emergency fund is just some money sitting around doing nothing, but that's not true at all. An emergency fund is your stress shock absorber. It helps you make better decisions. It keeps you calm, cool, collected. It gives you peace. It gives you options. It's not about earning interest. It's not about buying things. It's about an insurance policy. I call it attitude money. Let's make it plain because most folks never think about this. An emergency fund is your attitude money. It's set aside to cover things such as job loss, medical bills, a major car expense, unexpected travel, family crises, or sudden life disruptions. It's not for vacations. It's not for birthdays. It's not for I saw something on Amazon and have to have it. This is not spending money. This is survival margin. It's your financial reserve fuel. So if you don't have a reserve fund, where do you start? Well, I say start where you are. You can take this in 3 phases. Phase one would be $1,000 of emergency savings. After you have that $1,000, your attitude tends to change. It's said that most American families couldn't cover a $400 emergency expense without selling something or having to borrow the money. That's unacceptable. After you have your $1,000 set aside, go into phase two. Phase two would be 3 months of essential expenses. That's your basic living expenses, rent or mortgage, food, your car payment, your insurance payments, and medications, of course. After phase two, you move on to phase three. Phase three is stability. You want 6 months of savings if you have a stable job. If your job is not stable, you'd want 12 months of savings. And for pilots, let's be honest, aviation is cyclical and unpredictable. Err on the side of caution. More margin is better. So, how do you build an emergency fund? Well, it doesn't have to be giant leaps. It just requires habits. Automatic transfers every week. Each time you get paid, just take a small portion of that amount and set it aside. Cut one unnecessary expense. You can find something. There are subscriptions that you probably have and don't even know you have. Cut that out, take that money and set it aside into your emergency fund. You can redirect tax refunds, bonuses, or any small windfalls you might receive. Sell one unused item from your house, or pause investing until you have your safety margin. You don't build an emergency fund with big money, you build it with consistent money. So stay consistent, build that fund up. Be sure that you keep your emergency fund someplace that you have direct access to it. Keep it in a safe at home or somewhere that you know that you can get to it. Think about what happened in Houston in 2021. When the weather came down, we had the ice storms in Texas. Power went out. When the power went out, the banks closed. The ATMs quickly ran out of money, and many people were left without the ability to access their cash. And that was right when they needed it. Don't let that be you. So here's where it all comes together. Your emergency fund is not wealth. Your emergency fund protects your wealth. Because if you don't have margin, one storm forces you to make desperate decisions. You may have to sell assets at the wrong time at a loss. You may have to take on high interest debt. You may drain your retirement account. In fact, if you have to dip into your 401k for an emergency, just keep in mind now you're paying taxes as well as penalties on your money. But what happens when your emergency fund is strong? Your perennial wealth trees, your cash flowing assets, can grow uninterrupted. Trees protect the future. Margin protects the orchard. You need both. So what ended up happening that day in San Francisco? Well, we got the weather report. We understood that the weather was dropping quickly. We looked at our situation. We briefed. We decided that we had enough fuel for one approach. And if we had to go around because we couldn't see the runway, we were instantly going to declare an emergency and go on to Sacramento. So we began our approach. We did notify ATC of our situation and we let them know what the possibility was. We flew into the clouds, nothing in sight. We got down to minimums, still no runway in sight. Go around. Immediately, I declared an emergency and I asked San Francisco for a clear path and direct flight to Sacramento, which we were issued. We climbed back up to 12,000 feet. Because the lower you fly, the more fuel you burn. So we climbed a little higher just to burn a little bit less fuel. As you can imagine, it was very, very busy. We didn't have time to brief the flight attendants. We didn't have time to let the passengers know what was going on. We had to go. As we began to get closer to Sacramento, the good thing is the weather there was clear. I saw the airport. I was able to fly a visual approach and landing, touched down, turned off the runway, and taxied to the gate. We got everyone there safely. We refueled and were able to wait for the weather to clear up in the San Francisco area. Then we flew back. If you remember nothing else from this story, remember this. You can't control the weather, but you can control your fuel. And you can control your margin. Emergencies don't wait for convenience. Life storms don't schedule themselves around your paycheck. But people with margin, people with financial runway, they don't panic when the fog rolls in. They adjust, they adapt, and they land safely. I'm Papa Charlie. Class dismissed.